folks, and welcome into today's video. Hope you guys are doing great out there. As always, in this video here today, we're gonna get into the public account. I'm gonna give you a live look at the entire public account. We're gonna talk about all 13 stocks that I own in this particular account, and I'm gonna give you my commentary around these stocks. Like, why am I invested in these stocks? What is my take on these? And let's be honest, a lot of these 13 stocks we don't talk about very much on the channel. A few of them have been talked about a lot over the past few months by me, right? There's been a lot of drama around certain of these 13 stocks, right? But a lot of these we hardly ever talk about, so I'm sure you guys will really enjoy me talking about some of these stocks we don't usually talk about very often, okay? And by the way, the public account just turned 4 years old recently. Throw the birthday claps up there, okay? And you know, it's been amazing to kind of build it from literally nothing to now $1.7 million plus in it. How have we done that? Deposits of money. Obviously, you can't like grow a pie if you don't have some money going in the account, right? So deposits, taking of profits in this account, holding profits in this account, and reinvesting everything in sight in this account, okay? I've never taken money out of this account to go buy stuff with it, like, I want a new Tesla. Let me just like take money out of this account to go buy. I reinvest everything back in. I treat this account exactly how I treat all my other accounts. And the only difference I would say between this account and my other accounts is this is probably my most disciplined account I've ever built. In the past 12 plus years being in the stock market, I've never been this disciplined around an account, okay? And the reason is, honestly, I care more about this particular account than any other account I have. And this isn't even my biggest account, which is quite interesting. I have accounts that have more money in than this one, but yet this one I care more about than any other because this is an account that everybody in the private stock group for the past 4 years has been able to see every single buy or sell I've ever done in this account. And I alert them, hey, I just bought this stock, here's why I bought it, here's why I sold this stock, things like that, right? And being that I do that, there's a lot of pressure that comes along with it, right? Like, what if I make a mistake? What if I sell the wrong stock? What if I buy the right stock? I have to explain myself all the time. There's a lot of pressure that comes along with basically having a public account where every single move you ever make is documented and you got to explain yourself constantly. But I care about this account a lot and I've been very happy to build it. You know, I didn't think we would hit a mil till probably at least 5 years plus. So the fact that we're already approaching 2 mil is, you know, I'm beyond happy for that, okay? So hope you guys enjoy this video. As always, don't forget to smash the like button and the subscribe button if you're not already subscribed to the channel. Make sure you do so. You can even hit notifications on if you want to be notified every time I drop a video. Well, YouTube will send you a notification sometimes they won't. It's a little inconsistent, and I appreciate you guys smashing that like button. It helps out huge in YouTube algorithm. If you want to join Stock Hub, it's absolutely free to do so. That's the best stock Discord chat out there. That's going to be linked in the description. Also might have that as a pinned comment. And the Hungry Bowl, the software team is working super hard on that to make that better and better and better each and every week with updates. We now have conference calls in there where you can listen to those, SEC filings, track your stocks, do research, so much more coming as always. Alrighty guys, let's get into this. So first two stocks up here, we'll take two stocks at a time. Cruzy Doozy and Elf, okay? Cruzy Doozy first. Now you might wonder what's the little writing I have beside those. That is basically, is this a growth stock? Is this a value stock? Is this a dividend stock? Things like that. So with Cruzy Doozy, I would group that as a growth stock plus a value stock. The valuation on Cruzy Doozy extremely compelling. Like, look at the forward P on that stock, extremely compelling. But this is a nice growth company. Companies should have very nice growth over the next year and the year after that. They should, keyword is should, we'd never know these things for 100% certainty, but they should have some new chips coming in, Apple products here over the next year, including possibly this next generation iPhone. Once again, these things are not for sure, right? You know, but just if you kind of read the tea tree leaves on what Cruise has said, and you look at some of the information that's come out about the next iPhone that's coming out in September, okay, this month, I mean, it looks like Cruzy should have a new chip in there, okay? But needless to say, the company has a lot of growth in future years, in my personal opinion. All they've done over the past 10 years is grow that business. Like, look at where this business was back in 2010, 2011, and look where the business is at now when it comes to revenues, profitability, the amount of chips they have in different devices. They've done nothing but grow that business. I have 200 shares in that one. It's my smallest position. Cost base is $35.48. I mean, the thing that usually keeps me from not buying more Cruise is just the fact that they're so reliant on Apple. They get around 80% of their revenues roughly from Apple, okay? When you're talking about that sort of reliance on Apple, it's a little scary. Now, the great news is you want to have a great connection with a company like Apple. Like, you know, Apple moves crazy volume. It's the biggest company in the world. Like, that's great. But at the same time, it comes with the risk. Like, what if their relationship ever broke up or something like that? Imagine what that would do for the stock. So, you know, Cruisy Doozy is like one of those stocks, I just love it, but I just wish I could own more of it, but it's scary to own more of it, okay? So that one we've done very well, made over $10,000, and I believe I've taken a lot of profits out of that stock in this account as well and put that into other stocks in this account. Still up 10,000 plus in this 146% gain there, and like I said, it's a combo of a growth and value, and that is a semiconductor company. Elf Beauty Cosmetics company, right? This is just a straight growth play. I got into this one, you know, a couple years ago probably now, and it was just a perfect timing, right? The stock was beaten down. It was, they were making some good partnerships with some huge creators on YouTube and other folks, getting the brand out there. It was a whole turnaround situation. 728. I've also taken a lot of profits in this one, which I wish I didn't, because unfortunately I took a lot of those profits too early, and I wish I held every share, honestly, you know, still in this one ultimately in the end, okay? But when it comes to Elf Beauty as a growth play, we're up over $23,000 in these current shares, 321% gainer on this stock on those 1,000 shares, right? And so I think the thing Elf Beauty, what's so beautiful about this company is you don't need to always be in some crazy stock or some tech company and make some crazy percentage gains. We've only been in Elf for a couple years, and to have a 321% gain is near magical. So I think this is like some food for thought for everybody, because everybody always thinks they got to be in the craziest company, has the craziest idea, and like, you know, they're trying to like change the world or something like that. And you know, sometimes those companies work out, but most of the time they don't, right? And those stocks flounder. They never reach their vision or their mission or anything like that. And here I was just with a perfect stock at a perfect valuation opportunity and a perfect turnaround play, and it's gotten us a 321% gain. My plan is to continue to hold that stock, and you know, I could see them potentially getting bought out down the road. If that doesn't happen, the company should just continue to grow and become a bigger and bigger beast over time, okay? Next two stocks up here, Avon Brands and Upwork. Avon Brands, ticker symbol AVTBF, okay? Why does that one have an S next to it? That's a spec play, okay? That is the one stock I hold out of these 13 stocks in this account that is a speculative play. And I'm somebody that in each of my accounts, I always want to be in one spec play, okay? Something that is that, you know, crazy stock, right? That, you know, they could become a huge giant and, you know, this and that, right? And with Avon Brands, they're obviously in the Jack Jackson industry, right? The stock is doing really bad for us. This is our worst stock in the account, down 28% on it. It just hasn't done well. I have a lot more shares in my main private account, like a lot more shares. That one I think we're doing decent on, but these shares here not doing well on, down 28% on 77,777 shares. It's a penny stock. I mean, literally a penny stock. It's 45 cents a share. It's you know, very high risk, very high reward. Not as risky as a lot of spec stocks, because they do have a really good amount of cash in the balance sheet. And if you look at the growth numbers this company's reported over the last year, they're incredibly impressive, okay? But at the end of the day, it's a 45-cent stock. It comes with its risk, okay? That one I might honestly buy some more shares in this account, maybe get it like up to like 88,888 shares, maybe 99,999 shares, something like that over time, okay? Upwork, this is a straight growth play from me, doing amazing now, almost 250% now. Freelancing economy is something that's just going to get bigger and bigger. And when I was making this investment in this company, I saw this industry and I'm looking at it and I'm like, the freelancing economy is just getting bigger and bigger. And Fiverr and Upwork have a huge market share in this, and they look like the two players that are positioned to thrive in the future, right? Fiverr a little more with maybe small businesses, and Upwork a little more with mid-size and large businesses. And so I look at this and I was like, this is an incredible opportunity, and we've done amazing on it. I wish I got to build the position a little bigger. I only got to buy for 11,000, and the stock just started going up and up and up. 1343 on this one. It's shown amazing growth, and honestly, I look at the business model and I love it. And, you know, this is a stock I'm proud holder of, and I plan to continue to hold despite being up 20,000+ on that one. I look at this stock and I think there's years and years and years of revenue growth and net income growth that this company is going to go on over the next decade. And for that reason, I'm a proud holder of Upwork stock. Next two stocks up here, Honest Company and The Planet, okay? The Honest Company is a growth and a value play. The value is pretty darn compelling when you look at a price to sales ratio versus a lot of competitors, and the company should grow 13% plus in 2022 according to analysts, okay? I believe, no doubt in my mind, that double-digit growth the company should experience next year, and honestly, almost every single year for this entire decade, essentially. I'm looking at a company that reminds me a lot of Elf Beauty. It's a beaten down stock, building the brand bigger and bigger and bigger. It's a company that went public very recently. It's had a rough IPO, and the reason is they came off a year in which comps were insane to comp against, right? The Rona stock up, which happened last year. I mean, that's a tough situation to comp against those numbers. And on top of that, right, just a lot of companies in general have trouble getting that shareholder base initially, right? Even all big dog companies have trouble there. So Honest is actually a stock that I'm honestly thinking more and more about adding more shares up and averaging up in this position. 923 is the cost basis on this one currently. And I love that one for like, I don't want to go super in depth on Honest. I made a video about that stock last night. So if you want, check out the channel and check out a video. I literally just put out an entire video on that stock that was like 25 minutes long on that one. So we're not going to spend a bunch of time on that one here. But yeah, I love holding that one and plan to, if anything, buy more shares of that one and just hold that baby long term, okay? The Planet is next up here. That's a straight growth play, right? This used to be a spec play for me, but I wouldn't count it as a spec play anymore, even though it's still a lower price stock, right? It's, a little under $5 a share. Now they have multiple stores. They have many more stores they announced coming over the next year or so. Plus the company as of last quarter had, 9 figures of cash on the balance sheet. The management team has proven they are as solid comes. And so when I look at this particular stock, and the revenue growth, all those things, I don't really consider it a spec stock anymore like I would something like an Avon Brands. Now I just consider it a growth stock. Now some folks wonder, what would it take for the Planet to get on a major exchange over time, like the NASDAQ or something like that? From my understanding, since the Planet is an American company and what they sell is technically still federally illegal, they cannot get on a major exchange from my understanding. Until the federal legalization comes for American companies, right, in this country, then at that time the Planet would be able to uplist, from my understanding, to like a NASDAQ or the New York Stock Exchange or something like that. So there's kind of that time period here where it's kind of that awkwardness where this company's growing bigger and bigger and bigger, and it's like, hey, we're ready to get like uplisted to something, but from my understanding, legally, since they're an American company, they can't. You can buy Canadian companies on some of these major exchanges, right? But remember, that's Canadian companies. In Canada, it's federally legal versus US, it's not, okay? So this is something to keep in mind there with the Planet. Love that one, obviously. It's a growth beast for us, and yeah, that's one of those stocks that's like, it doesn't, what happens with it in the short term, I'm not selling it. It go down to 3, if anything, I'd be buying it if it went down to 3. If it goes up to 6, I'm not selling it. Like, it doesn't matter. Cost base on this one is $1.25, 10,000 shares there. That's a very, very small position I have in that one compared to my big dog main private account. That account I have a lot of shares, okay, and I average up a lot of times on that one, okay. Next two stocks up here, Dropbox and Skyworks Solutions. So Dropbox here, this is another good example of you don't need to change the world to make a lot of money in a stock. It's a stock I started buying, what was that, December, January, somewhere around there. And I was talking about it a lot. And a lot of folks were looking at it and it was like, I don't know, $8 billion market cap or whatever. And folks were like, I don't know, Dropbox, like cloud company, but the valuation on Dropbox was so compelling. It was growth mixed with value, mixed with a sticky business model and almost no customer concentration. When you get those things, mixed together, you're setting yourself up for likely a lot of success. And Dropbox has been nothing but a huge success for us, right? 62% gain for us in this stock is absolutely insane. And I have absolutely 0% interest in selling the remainder of these shares. I did take some profits out of Dropbox, but that was mainly because I saw some other deals out there that are just like steal deals. But these last 2,500 shares of Dropbox, I have no interest in selling those. If anything, I plan to hold those long term. I love Dropbox and I love it for all the reasons I stated before there, okay? So Dropbox, and then with Skyworks Solutions, this is actually a GVD play, okay? If you know anything about my GVD 1-2-3 strategy, Skyworks is a straight GVD play. It's growth, it's value, and it's dividends. If you look at Skyworks, they're experiencing rapid growth right now because 5G technology is taking off, right? And this is a stock I've been talking about for the last 2 or 3 years and talking about how I'm trying to, build up a position in Skyworks to capitalize on the 5G boom that was coming, right? Well, now it's actually here. Now it's actually happening. I have built out my position in Skyworks, and you know, the stock's doing nothing but being a beast, and the valuation is not crazy. Look at the forward P on the stock. It's not like some insane, especially when you consider the growth of the semiconductor play. Look at in the last generation of iPhone. Look at how many chips in that, and the breakdown were solutions. I think it was 7 or 8 chips were Skyworks Solutions chips. Wait for the next iPhone. You know, look at the chip breakdowns and then count how many chips are Skyworks Solutions. It's absolutely amazing. But they're also doing that with other smartphone companies as well. Pretty much almost all of them out there in general. Okay, so Skyworks Solutions, plus it's a dividend stock. It pays us out dividends every 3 months, and those dividends usually just get bigger and bigger and bigger as the company gets bigger and bigger and bigger. So yeah, I love Skyworks Solutions. You know, I hold 650 shares there. $117,000 is current value. We're up over 68,000 on that, up 139%, and I have absolutely 0% interest in selling Skyworks Solutions. Love that stock, okay? Next one up here is Facebook and Revolve. Now, Facebook, that's a growth in value play, okay? If you look at the valuation, it is way too low. And I've been speaking about this was a $150 stock. I mean, it's just way too low when you look at Facebook's valuation, when you look at the forward P, when you look at the growth this company still has in front of it over the next 5-10 years in terms of revenue growth and net income growth. It's insane, okay? And they own, you know, the brands you want to own. They own WhatsApp. They own Instagram. They obviously own the Facebook platform, Facebook Messenger. They own Oculus, which is getting huge in the VR space recently, right? And so they own all these amazing brands, and the brands just get bigger and bigger as time goes on. The revenue keeps skyrocketing for this company. Net income continues to grow, and it's a growth and it's a value play all in one, okay? And so that's what I love about Facebook. 371 shares there. We're up over $82,000 in this one, 145% gain. $56,000 is what I put into the stock, well, $56,893 to be exact. And that's another one of those stocks that I have absolutely 0% interest in selling. I love the fact that I can hold one of the big techs in this portfolio, and one that I think honestly is going to continue to outperform most of big tech, if not all of big tech, over the next 5 years or so, okay? Next stock up there is Revolve, RVLV. Straight growth play. We're up 450% on the stock, up $126,000. And I only put $28,000 into the stock. So think about that for a moment. Only put in $28K and we're up $126K on the stock. Absolutely been a beast for us. This is another example, kind of like Elf, of you don't need to necessarily change the world to have a stock that's absolute beast. It's an e-commerce play in the clothing space. Stock was insanely beat down last year in 2020. The reason being is obviously Rona was going on, right? So a lot of folks didn't buy clothes. They were kind of like, hey, why do I need to go buy a new dress or this? There's not a wedding to go to. I don't have to go to the office. I don't have to do this, right? And so Revolve, their business definitely got hurt in a major way last year. And now it's coming bouncing back, just like, you know, like my bullish thesis around this was like the management team's done an amazing job of executing on this company. The valuation got pushed down insanely low. And I'm thinking to myself, as I was making this investment, I'm like, do people not realize that people are going to start buying clothes again, and like the world's going to open back up eventually, and like things are going to get back to normal, and like people are going to be doing this and doing that? And sure enough, that has started to happen now, and the stock has done nothing but prosper, be a beast. And yeah, I'm a proud shareholder of that company. I have no plans to sell out of that stock. I'm just a happy holder, okay? Next two stocks up here. Now these two stocks are the ones that I've talked a lot about in the channel the last couple months, right? I've been investing in these stocks very heavy in different accounts, including my main private account. Tattoo Chef's a 7-figure position in that account, and then Corsair is a massive position in that account as well, right? And so these are two stocks I've been talking about a lot the past few months. Corsair Gaming is a growth and a value play. Forward P of like 16 on this stock, and they just grew, and it was like, what was it, 24% year over year in the last quarter? The company's profitability is being hurt right now because of logistic reasons and just a lot of the crazy inflation in different components and parts we've seen over the past year, okay? And so that's kind of hurting their net income in the short term, but eventually, you know what happens in those situations? That goes away, and the profitability starts skyrocketing again. When you've got nice revenue growth behind you, Corsair's in a great position, because here's the thing, analysts only expect this company to grow revenue 5% next year. It's not like this company has some huge expectations on it. It's like, whoa, or some huge valuation on it where it's it's trading at a forward P of like 95 or something like that. It's trading at a forward P of 16. The expectations are super low for next year. So this company's set up into a position where this stock might not just be a beast over the next 5-10 years, but it might honestly be a beast over the next 1 to 2 years. And that's why I'm extremely interested in even buying 2024 call options in this one, because honestly, it's set up in a great position here, okay? As of right now, we're down 10% in the stock. Yeah, I'm gonna continue to buy that stock and buy that stock and buy that stock, okay? Next one up here, Tattooed Chef, okay? TTCF. So here we are with Tattooed Chef. We're up 9.5% so far in this one. Obviously, it's been a stock I've been buying a lot of in 2021 here, especially over the past couple months as it went down to, $16 and things like that. I was buying. And Tattooed Chef, we're up $21,000 so far in this account here. $242,000 current value, 12,222 shares in this particular account, and a cost base of 18.6. I said I got a 7-figure position in my main private account in this one. And when it comes to Chef, I don't know what I can say that I haven't already said. The company is innovating faster than I've seen any food company ever innovate in my life, and it's not even close. And I've owned some great food and drink companies in the past, and I've never seen a company innovating this fast. The SKU expansion this company's on, they are relentless. And you don't bet against relentless companies, okay? I've learned over time that when you find relentless management teams that do not get content, you either get out of the way and you don't partake in that, or you do what I do and I buy the dang stock. And that's just a flat out honest truth when it comes to Tattooed Chef. When you look at this company, it doesn't matter that they just reported 60% branded revenue growth in the last quarter. They're worried about how much they're gonna grow next year, and the year after, and the year after, and the new products they're gonna come out with, and the new SKUs they're gonna get into, and making everything better constantly. This management team at that company is relentless in their pursuit of becoming a food giant, and I'm nothing but thrilled to own this stock, and I plan to own the stock for many, many years to go in the future, because I don't just look at the stock as like it's a 1-2 year play or something like that. I'm looking at this stock as a huge 5 to 10 year play, and as long as they continue to innovate and those SKUs keep expanding, they get more and more SKUs in the stores, they keep getting into more stores, like I have no reason to be like, oh yeah, let me get out of this or something like that. Like this, food giants and drink giants have tens of billions, if not hundreds of billions of dollars in market cap. This is a $1 billion something company here today. They are a teeny player in a massive market, and they're innovating faster, much faster than any company in the space. Where do you think this company's going over the next 5-10 years, okay? Time will tell, and the people that are naysayers on that stock, they'll be nowhere to be found, or they'll turn into believers. One of the two, okay? Next stock up here, last stock of the bunch, is Tesla. A straight growth play, up over 1,500% on this particular stock, of 523,000. Man, did that stock have a lot of naysayers back in the day. Woo-hoo-wee! Oh, that was a whole other level when we dealt with Tesla back in the day, okay? Obviously, companies just executed phenomenally. 750 shares here. A cost basis of $45.51 on a split adjusted basis, right? And yeah, the company's done nothing but just execute and execute and execute and do better than even myself ever expected, right? The company is just, it's got a team over there at Tesla that, some of the smartest and brightest folks out there work for that company. They continue to be relentless. They can be so many years in front of the competition when it comes to so many different things, whether we're talking just the technology in their cars or whatever it might be, and yet they still just keep the pedal on the metal. They're never content. You don't see this company just sit idle for like a year and it's like, oh, they're not doing anything. No, they're constantly trying to stay way ahead of the game and change the game in general. And it's just, I can't sell the stock in this account, and the reason being is like, one is taxes, and two, why would I sell a stock that just continues to outperform when it comes to the actual fundamentals of the business? Like I said with this company, they have a relentless management team, and when I really just break it down, I'm thinking like okay, I could sell this, I could put that money into other stocks and whatnot, but I'm thinking and I'm like, why? That's almost like disrespectful to the management team because they've done so amazing. So those 750 shares there, I plan to just continue to hold those for years and years to go in the future, and even if the stock stagnates for 1, 2, 3 years, I'm perfectly fine with that, because with Tesla, you never know when baby's going to take off like a rocket ship again, right? That's just the way that stock works. It has these low periods where it won't do anything for a time period, but it's impossible to time exactly when it goes on its next huge run. So I have no interest at all in selling those 750 shares there. Totals up $915,000. That does not include dividends received in this account. That also does not account for all the profits we've taken in different stocks over the past several several years in regards to this account, so it's done absolutely phenomenal, and the profits alone just on these positions literally outweigh you know, over 50% of the total in this particular portfolio. So yeah, I'm excited for the portfolio. You know, I would say probably hit 2 mil at some point in 2022. Possibility it could hit 2 mil this year, but it would need, honestly, it would need Corsair and Tattooed Chef to really get rolling. And I mean, I don't know, you know, Corsair, the stock just doesn't move as much as that company is exciting. The stock just hasn't moved recently. Eventually, when Corsair moves, it's going to move easy, right? But it just hasn't done much. So it would hit 2 mil this year if Tattooed Chef and Corsair really got going. But outside of that scenario, I'm thinking 2022 will be the year this account hits 2 mil, which is way earlier than I ever expected it to. So I would always rather have expectations be a little lower rather than a little higher. So hope you guys enjoyed this video. As always, don't forget to subscribe and like the video before you guys leave. I appreciate you in a massive way. I hope you appreciate me doing these videos, talking about these different stocks and my perspectives there. If you want to join us in Stock Up, there's a best free Discord chat out there. There's a pinned comment down there. And also, don't forget to download Hungry Bowl on your iOS or Android store now. If you really enjoy the app, leave us a review. It would mean the world to me, guys. I appreciate you in a massive way. Thank you for watching and have a great day.